It's January 8th, and this is of course the video log that takes 30,000 to a million. After I take you through the accounts, I want to show you how to roll put options, selling put options on Robinhood. So here we go. I'm sitting at 147,672 at the moment. It's a decent gain for the day, but sure is no Bitcoin or Tesla. Those things are just high flyers. I'm wondering when they're gonna top out and have a bit of a correction. It's been really heated. By the way, when it comes to Tesla, I do have I think I do want to take a little bit of credit, even though I don't own the stock because it's way too risky for me. Like, I'd never own it. I'm just not that much of a growth investor. I did make a call about it, that it could become one of the top valued companies in the world, one of the top 5, and even gave it like a 5% chance that it'd be the most valuable company in the world. And I made that prediction maybe like a year or something like that ago, maybe a year and a half. But anyway, it's a little bit off topic. I should have put my money where my mouth is, but I'm just can't stomach these growth stocks that make no money. It's very hard for me. Anyway, let me review the account real quick. I'm going to scroll down through the positions on the right column there. What you'll see is the options first. And you see the symbol here, the strike price, whether it's call or put, the expiration date, number of contracts, and whether it's sell or buy. You can pause the video at any moment here to see all the positions. And then I'm going to move on to the equity. So this is Apple coming up here. Then we have Realty Income, which had a little bit of a gain. Main Street Capital, etc. Uranium had a down day, but that doesn't really bother me too much because I have calls sold against energy fuels, so it doesn't matter. And then Energies had another good day, as well as the emerging market, dividends, bond fund. All right, and this is it. Now, what happens if, now I want to talk about the, whoop, that's my microphone. I want to talk about how to roll the put options in Robinhood. So what does rolling mean? Well, if one option becomes, you already get all your money out of your option. Let's say you're selling options, right? So you sell an option for, let's say 100, and you want it to go back down to 0 by the expiration date, because that's a liability erasure, okay? So you get that $100 once the option expires. That's how it works, right? So what you can do is, if you sell an option that's expiring, let's say February 5th, like I'll give you a real example in a minute, and you sell it for $100, and then you get most of your return back, like let's say 80% of it. So you erased $80 of liability in the first week, and now you got another 3 weeks to wait for the other $20. Then what you may want to do is you can buy that option back and sell one with a strike price that's closer to the current price of the asset. So I'll show you what that looks like in Robinhood. Okay. So I've actually done this with EPD over here, and I just did one option today, so I might do more of them as the price keeps going higher, because I kind of actually want to get into this position. So EPD's been climbing ever since I sold my first 9 contracts, and you'll see it. I had 9 $19 contracts sold. Now I have 8 contracts for the 19 strike price and 1 contract for the 20 strike price. So if we go into the history, you'll see what I've done a little more clearly. I'm scrolling down. I'm going to click show more, and you'll see that I had to work the trade a little bit, but you'll see that down here I purchased the put first, I'm sorry, I sold the put first for $37 with a $20 strike price, and then I bought one of my contracts back with a $19 strike price for $17. So I've basically kind of cashed in. I've collected my gains on that contract, and I sold the $19 put. You'll see down here at around $80. Okay, because I sold 9 of them, so $80, and I ended up buying it back for 17. So I got like 80% of my gains for that contract, and I didn't want to wait until February 5th, which is when the expiration date is. It's now only January 8th. So waiting for $17 for a whole month wasn't as appealing as waiting for $37 for that month. You see how it works here? So that's what I ended up doing, and I could do it with more of my positions. I could do it with all of them. The risk that I'm running is that by raising my strike price, let me go back to the EPD here. One sec. By raising my strike price, I run into a risk of executing the trade, right? It's at $21.39 at the moment, enterprise products. And if it drops down to 20 by February 5th, I will have to purchase 100 shares as per the contract. However, I just don't think that that's happening. So I want to collect more premium. You'll see it's had a really nice rise here, and it looks very stable over the last week. If I pull it out to the month chart, this is what happens, right? There is a chance that it goes back down to 19, but this is the 3-month chart and this is the year chart. But I'm willing to take that risk, right? I'm willing to own that because I really want to own this company anyways. I just don't want, I want to be paid to wait to buy it. And I'm willing to buy it at $19 and I'm willing to buy it at $20. So this is kind of how I rationalize this move. But if you're not willing to own enterprise products at $20, then don't do this, right? You don't want to roll your options unless you're willing to own the equity at that higher price. Okay, so for example, that's what happened with me in Cameco. I didn't want to keep rolling options because I don't want to own Cameco at 13, 14, or 15. I would rather own it at 10 or 11 or $9, right? So I kind of passed up on that opportunity as the price of Cameco was rising. I didn't want to keep rolling because I just didn't want to own it at that higher price. So that's how you do it. If you have any questions about this, just shoot me in the comments and let me know, hey, I don't understand this or that. I can go further into explaining some of these methods. Or if you, for example, don't understand how I get money from liability ratio or anything about options like that, I'd be happy to explain further. Because I really like Robinhood, and I want all y'all to have as many tools as possible to make money out there. And if you like my style of making money off the markets, then I can help. Or if you think that I could be doing something better, right? Let's say you know more than me. If you think I can be doing something better to increase my returns through these types of methods, and maybe you're going to recommend some kind of system or whatever, I'm also all ears, because I do actually want to learn from anyone who has something to teach. So with that said, I'm going to stop it right here, and hopefully you'll make a lot more money than I am. But if not, keep your heads up, it'll come. Or maybe some of your Tesla investors, so you're doing pretty well. All right, with that said, peace out.